Welcome back. Markets are rallying this morning. Take a look at futures indicating a triple-digit gain for the Dow Industrials and the Nasdaq. The Dow up 253 right now. The Nasdaq is up 334. Both indices further in record territory right now. After all three major indices finished in record territory on Friday, the Dow closed above 47,000 for the first time ever, up 472 points. That was better than 1%. The S&P 500 notching a 34th record close of the year with a gain of 53. And the Nasdaq up better than 1% on Friday, 263 points higher as the melt-up rolls on. Investors are putting focus on big tech earnings this week and the much-awaited meeting between President Trump and Xi Jinping in Seoul on Thursday. The U.S. and China agreeing on a trade framework ahead of that meeting. Top economic officials laid out the terms to extend the trade truce and address issues from rare earth mineral exports to agricultural deals. Treasury Secretary Scott Bessent said that threat of 100% additional tariff on China seems to be off the table now. Watch this.
I think we had a very good two-day meeting. I would believe that so it would be an extra 100% from where we are now. And I believe that is effectively off the table. I'm not going to get ahead of the two leaders who will be meeting in Korea on Thursday, but I can tell you we had a very good 2 days. So I would expect that the threat of the 100% has gone away, as has the threat of the immediate imposition of the Chinese initiating a worldwide export control.
The secretary seemed to believe that the Chinese could put that export control issue aside for a year while they look at it. President Trump, meanwhile, imposed an extra 10% tariff on Canada over the weekend after a controversial ad from Ontario, which featured President Ronald Reagan. The president said that Reagan's speech on tariffs was misrepresented in that ad. Joining me now is Portfolio Wealth Advisors President and CIO Lee Munson. Lee, great to see you. So many things to track this morning in terms of our own portfolios. You've got potentially a deal with China ahead of this meeting on Thursday. You've got a major week of earnings with big tech and, of course, a Fed meeting this week. What are you watching most, and what do you think drives stocks?
Well, what I think drives stocks right now are going to be these big tech earnings this week. It's going to tell us everything we need to know about the economy. Apple has to deliver on iPhone 17 sales. That's the consumer story. Microsoft has to really give investors an idea over the next 12 months. How are they going to monetize AI? Because that's your CapEx story. That's what's going to drive that marginal GDP going forward. And then you have Amazon. You know, it's still got low double-digit earnings. We're probably going to see that Amazon Web Services is still killing it. And I'd really like to hear more from Amazon about selling ads on Prime Video, selling ads on sort of Amazon.com. Again, it's a consumer story. So I think that by Halloween, we're going to understand a few things. Is the consumer still strong? And then by the end of this week, I think the narrative that we've got one more year of kicking the can on China, on rare earths. We can always subsidize, Maria, soybean farmers, but we can't subsidize, rare earths and things the Department of War needs to keep going. That's the biggest news right now. I think that we've got going between now and, trick or treating.
That's a great point that you make all around. So would you put new money to work in these major tech names ahead of their earnings this week?
I'm not exactly selling in front of this. I think that the major tech names will give us a signal about the broader economy, and that's really what I'm looking for. We've got earnings, whether it's large value, small value, the Nasdaq, just the S&P 500 at low double digits going forward. I think a lot of investors don't realize when you look at earnings, even when you look at things that are outside that AI world, we're still looking at 10, 11, 12% across the board over the next years. That's great news. But if these tech companies don't give investors that confidence, if we don't see people buying the one thing they got to have, which is that iPhone, and that one thing that we need to hear, that Microsoft has some idea about how they're going to charge more money to pay for this CapEx, then I don't think you're going to get a broader rally going into the end of the year. So that's where I'm really committing my money. I want to go where I can get low double-digit earnings growth and much lower valuations, and that's going to be outside that tech complex.
Yeah, it's a great point. Ryan Payne, jump in here because you've been bullish on NVIDIA and all these AI names for a while, and you've been right. What do you want to do now? It's Judgment Day with the earnings. Aren't we going to have to see some kind of an ROI, return on investment, at some point, given we've talked about all these hundreds of billions of dollars going into AI? Do we need some evidence that it's working soon?
I think at some point, yes, you are, right? At some point, you have to pay the piper. And I think that's going to be the big question. I don't know if it's today, because today we know AI infrastructure spending is just going at, it's all hands on deck. There's a lot of going there. But what I wonder is, Maria, is you have OpenAI, ChatGPT, which is the most used large language model. I always remind people they make no money, right? And if you look at their price to sales right now, it's something like almost 40 times, which is very similar to what we had with Cisco back in the year 2000. So I think, kind of go to Lee's point here, you want to start to look elsewhere for your money. Lots of places where you get double digits growth and you're getting much cheaper valuations. So I think the biggest mistake investors make right now is just to put their money in that AI trade. It is very overconcentrated. We're diversifying. I recommend that people diversify as well.
All right, all good advice there. Lee, before you go, real quick, are you expecting an interest rate cut this week when the Fed meets for this October meeting?
I am right now. I've always been a cutting bear, but right now labor is in control. Nobody cares about inflation. Nobody cares about, I have a thesis that you got to see 2.9 for 6 months on inflation. I don't think it's going to matter. We want to hear the narrative that we're in a rate cutting cycle, not risk management cuts. That's everything.
We will leave it there. Lee, great to catch up. Thanks so much. Lee Munson, stay with us. We'll be right back with Gordon Chang.